Well, it seems that normal transmission resumed in US trading overnight, and the only way is up. Once again, those glamorous tech stocks led the markets higher, meaning the Nasdaq was the top performing index last night, up by 1%, but both the S&P 500 and the Dow Jones Industrial Average were up by about 0.8%, so a fairly close performance and very broad-based buying, very encouraging for some of us who are worried about the narrow nature of the rally that we've seen in the US. Most sectors finishing in the green, but as mentioned, it was the tech stocks that led the way. Amazon this time up 4.3%. It led the rally. One of the concerns some traders have at the moment is that market pricing now indicates that the US investment market believes a rate cut after the September 17th meeting of the US Federal Reserve is a given. In other words, they've already priced in a rate cut in the middle of September. Now, the concern here is if the Fed does not cut rates, we could see a severe market reaction, particularly if any commentary accompanying that sort of move was particularly hawkish. In other words, taking rate cuts for the following months off the table as well. And it's something to watch out for. Although jobless numbers are ticking higher, and we'll hear more about that tonight, the reality is inflation is also ticking higher. And trending upward inflation tends to tie the Fed's hands. So while, as I say, at the moment, the whole market is assuming there'll be a rate cut in a week and a half's time, the risks if the Fed doesn't deliver that rate cut are very, very significant. It's something to keep in mind, and keep in mind as we head into tonight's read. I'll come back to that at the moment, but turning once again back to the market action, cryptocurrencies have been under pressure recently. Bitcoin's down around 7%, Ether down around 5% since the middle of August, and that pressure seems to be ongoing. We saw further falls overnight after a bit of a bounce in the previous couple of trading sessions, and it flowed into Nasdaq trading. So despite the fact we saw general support for stocks and for tech stocks in particular, those that are exposed to cryptocurrencies actually came under pressure. And American Bitcoin, the Trump vehicle, is now down 20% from its recent high. Bullish, after a very strong debut on the market, is now under pressure, down 9.2%. And those well-known crypto plays, Strategy and Coinbase, are now down more than 25% since their peak in July. So cryptocurrencies obviously raising questions. Some investors a lot less confident than they were just 2 months ago, and that is spreading across the market. Something to consider if you are exposed to cryptocurrencies. Now, some of those exposures are a little surprising. There's a group called SharpLink that many of you are aware of because it keeps popping up on Moomoo's most popular trading list. It's a sports betting outfit, but it is a huge holder of Ethereum. Its shares fell 8.3% overnight, just highlighting how that sensitivity of cryptocurrencies is playing out. SharpLink shares are down 47% from an end of May high. And so on the way up, as cryptocurrencies were rising and a lot of companies were gearing up their leverage into cryptocurrencies, that had a spectacular impact, lifting their share prices. But unfortunately, that dynamic, when it reverses, can be just as dynamic. And we've seen pressure on those cryptocurrency plays since that peak and the fall that we've seen in Bitcoin in particular. So some concerns there. There were reports that the Nasdaq was looking at introducing restrictions around companies issuing capital to buy cryptocurrencies. I'm not exactly sure how that would work. It does seem like a very specific call, and that sort of call can be very difficult to legislate or to regulate, but nonetheless, that does appear to have added to the selling weight in these stocks. Broadcom, the second quarter revenue was reported overnight at slightly better than expected. It's predicting big AI growth, though, and so combined with the beat on second quarter earnings and an optimistic outlook for the third quarter, and also combined with news that the CEO has agreed to stay on for another 5 years, saw its shares gain good support in post-market trading. So this result after market has seen post-market trading lift the share price by 4%. They are up more than 100% over the last year, and in particular, they've had a spectacular gain from the April lows. So some concerns that the heights might be getting a bit dizzy for this share price, but nonetheless, the result released overnight supporting Broadcom's recent rises. One of interest is BYD. Now, we've been watching the Hong Kong market closely. It fell yesterday after there were reports that the Chinese authorities were looking at measures to curb short selling and possibly market enthusiasm, given the highs that we're seeing in the Hong Kong market. But nonetheless, BYD fell 3.2%. In trading. It's seen steady sales growth, but it lowered forecasts for the future, and it's facing fierce competition in mainland China. BYD shares are down 32% since the May high, and some may argue that that adjustment has been overdone, given that it maintains its position as the #1 seller of electric vehicles globally.